Switching gears here, Netflix, a heavyweight in the tech sector, is one of the so-called FANG stocks, and it reports after the bell today if they disappoint again. Can that lead the entire tech sector lower? We bring in Lou Bassanese, the founder and chief analyst of Disruptive Tech Research. Lou, good morning.
Good morning, Lauren.
All right, what are your expectations for Netflix? Because I know after their second quarter, they got killed, and the stock is still trying to recover.
Big swing and a miss last quarter, and there's absolutely no room for another one here. I mean, I think we talked about it. Reed Hastings had no credible reason for the miss last quarter, so they've got to beat expectations. I think the good news is, because it's such a focus on Netflix to really set the tone for the tech sector, the good news is the data points to them having a good report. And I say that because original content drives subscriber growth. And in Q3, they had over 675 hours of new content, up from about 452 hours in Q2. And then there was over 50 million app downloads, mostly in the US, Brazil, and India. So key markets for them. International still is going to be the engine that drives Netflix's growth. And so all signs point to a positive report. And everyone's looking for that.
The stock is up this morning in the pre-market, but it was down, and it was down big yesterday. And we also had at least three brokerages, Morgan Stanley, Raymond James, and Goldman Sachs, cut their price targets yesterday on Netflix stock. Where do you see the stock?
Look, I'm not a buyer of the stock here. I think it's priced to perfection. I said this last time, too. It's at 10.5 times sales versus the market at 2 times sales. There's a lot of downside risk here if they miss expectations again. But again, I think they're going to keep the market in a good mood about tech because they're going to report strong growth. Yeah. But if I'm looking to buy big tech names, Netflix is not at the top of my list.
Well, the number to watch is subscriber growth. 5.32 million subscribers added in the third quarter. We'll see. We're watching this one sharply. I want to switch gears here with you, Lou, because Cheryl was just talking, and our top story today is what happened with this Saudi journalist, Khashoggi. And this story intersects with Silicon Valley in a big way. SoftBank, a Japanese company, gets a bulk of their money for one of their funds that invests in many Silicon Valley-type companies, Uber being one of them. If you have Silicon Valley basically saying, look, we don't want to take this money, what are the ramifications for big tech and small tech?
Look, I think there's plenty of capital out there. I think the important thing is there's a swift response. We're getting one from the president, but we also need it from the tech sector, that people renounce their ties until Saudi Arabia complies with providing answers. And if they don't, there's ramifications for them. So I think that's the key here. This bull market has climbed so many walls of worry. I don't think this is going to be the one that ultimately brings it down. And I say that because we are responding so swiftly to it. And it's not just on the political front, but it's also on the corporate front with these tech companies.
Yeah, but see, it's fears of regulation, it's privacy, and now it's, SoftBank's tech fund, Vision Fund, $93 billion. When you get your bulk of your money from Saudi Arabia, this is another worry for a sector that once led the market but is now bringing the market down.
Yeah, I would agree with you. Look, it's a main source of capital, but we can also point to there's plenty of other capital out there in private equity that needs to get put to work. So yeah. I don't think it's not the only source that's been driving this. Earnings ultimately drive share prices, and the good news is we're coming into earnings season right now, the heart of earnings season, and the results are going to speak for themselves. Either the companies they're going to fail or succeed based on the results of their own business, and that's all that really matters.
Lou Bassanese, thank you.
Thank you, Lauren.